Good to see you this morning. How do you feel about the numbers?
Yes, good morning. Clearly, as you already laid out, we had a strong business results in the past 6 months. Our operating capital generation, which is the key target that we aim for, went up 15% to 899 million. We set a target of 1.5 billion for 2023, so we're clearly very well on track to deliver that. And some of it was also supported by higher rates, but I was particularly pleased also to see that the new business is growing. You already mentioned that our value of new business is up 5%. Netherlands did very well, but also the European markets and Japan have been very resilient in not an easy time. So overall, yeah, these are strong results, and we're well on track to get to the targets that we set for next year.
Karen and I, as you heard, were just discussing the inflation numbers in the United States, and obviously the focus everywhere at the moment is what the impact of inflation is going to be on household incomes and overall demand in the economy, and ultimately whether central banks are going to react by suppressing that demand further with higher interest rate increases. How much does that affect your view of the likely performance through the second half and into the early part of next year? How are you baking that into your modelling?
Right. So for inflation itself, by itself, is very manageable for us. We have the inflation that exposure that we have on our balance sheet is very well hedged with inflation-linked bonds or swaps. And so there is some upward pressure from expenses, obviously. About 50% of our P&C portfolio is sensitive to inflation. We haven't really seen it, to be honest. We have already started to reprice and will continue to reprice to anticipate some of the inflation that no doubt will come. On the disability side, we took an extra reserving of around 25 million. So we're very well prepared, I think, for the upcoming inflation. I think the biggest concern is actually going into the fall and next year is that a lot of the markets that we operate in have 15% inflation. If you see Central and Eastern Europe, there's around 15% inflation. And clearly salaries are not keeping up. And that means families will have less purchasing power. They will have less to spend. And I think so the base case is more of a recession. So on the one hand, that will put some pressure on our new business and on our portfolios. But we've seen also in the COVID times that if new business is low and economies slow down, that the business model can very well sustain that. And to be honest, also the higher rates also supports our investment results. So overall, that's why we're still very optimistic that we will achieve our targets.